In financial analysis, there are lots of things on the income statement and the balance sheet that we have to think about, right? But earnings per share is one that stands out. And if you are an investor, this is the most important number that you should look at. And this is basically used in the P ratio or the price to earnings ratio, where earnings is nothing but earnings per share. And this P ratio helps us figure out if you should invest in the company or not. Hi all, my name is Dheeraj from WallStreetMojo.com, and in this video we'll learn all about earnings per share, how it is calculated and how it is used in valuations to figure out how much a business is worth. So let's get started. So let us look at this income statement of a hypothetical company. Sales is given as $10,000, cost of goods sold is $5,000, so gross profit comes as $5,000. Essentially there are other expenses as well, but I want you to look at this thing called as the net income, and that comes out to be $900. So my question to you is how good that net income is of $900. The answer lies in earnings per share, okay? The answer lies in earnings per share. Let's imagine that there are 100 shares in the company, okay? What does this 100 share essentially represent? 100 shares represent 100% ownership of this company, okay? So what this implies is that this net income of $900, the true owner of these $900 will be the ones who own these 100 shares, because that amounts to 100% ownership, okay? So what does this earnings per share actually give us? Earnings per share gives us a number about what is the earnings of the company on a per share basis. So think of it, okay? So net income is the total earnings of the company this year. So what will be the earnings per share if there are 100 shares? So the formula is kind of very intuitive. EPS, or earnings per share, this is nothing but net income divided by your number of shares, okay? So what are the number of shares? 100. What is the net income? 900. So the formula is kind of very easy. 900 divided by 100. So what do we get as answer? That is $9, okay? So earnings per share is $9. But let's now change a variable. Let's say that instead of 100 shares, there are like 1000 shares, okay? So in this case, this 1000 shares will signify 100% ownership in the company, okay? So what will be the earnings per share, EPS? In this case, the EPS will be $900 divided by your, $900 divided by 1000, okay? And this comes out to be 0.9. All right, so what I was trying to initially tell you, that $900 as such in terms of absolute number doesn't signify anything from shareholders' point of view. But when you look at the EPS, you get a number which essentially tells us how much earnings you are entitled to as a shareholder, okay? So if you have one share, you are kind of entitled for $9 per share. So now that we have an intuitive understanding of EPS, let's look at how EPS is calculated in the real world. Okay, so the EPS formula gets modified a little, and this is how it is. EPS is equal to net income minus preferred dividends, okay, divided by your number of common shares, okay? So there are two things which I have written here: preferred dividends and number of common shares. So whenever we talk about earnings per share, we always talk about common shares, okay? So shares are kind of divided into two parts: preferred shares and then there are common shares. Preferred shares are nothing but shares, that has priority over dividends. So you have to pay dividends to those class of shareholders, come what may. Whatever is a profit, you have to pay them first, and whatever is left is for the common shareholders. So when we were talking about this 100 shares, we were talking about 100 common shares. All right, so let's assume that there were preferred shareholders here as well, and the preferred dividends that you paid to them is, let's say, $100, okay? Okay, so you paid $100 to them. So in this case, our EPS gets modified a little, nothing else. So in this case, the EPS will be $900 right? $900 minus $100. So divided by your number of common shares. How many is the number of common shares? The number of common shares is nothing but 100 here. So the answer will come out to be how much? So 900 minus 100, 800. 800 divided by 100, that will be $8. Okay. Another important thing about EPS that you must note is that there are three different variations. The first one is the trailing EPS. We also have the current EPS, and then there is the last one, which is the forward EPS. Trailing EPS is nothing but the last year's EPS. Okay, so whatever was the last year's EPS, trailing EPS. Current year's EPS is called as the current EPS. Okay. And what is forward EPS? Forward EPS is the future looking, forward looking EPS. So let's say as an analyst, you have forecasted the EPS for the next year. That will be called as the forward EPS. Okay. The most important application of EPS is from the point of view of investor. Okay. EPS essentially helps us in understanding whether you should invest in this company or not. So let's understand how it can be done. So have you heard about this ratio called as the PE ratio? What is PE ratio? PE ratio is nothing but price divided by earnings. Okay. So price is nothing but your stock price, that is the current price in the market, and earnings is nothing but your earnings per share. So stock price per share, earnings per share. So let's assume that this company which we had is trading at, let's say, $100. Okay. So the price per share is $100 and earnings is $8. Okay, so what will be the PE ratio? 100 divided by 8, right? So that comes out to be 12.5. Okay, so is it good enough or not? This PE ratio has to be compared with the industry peers and how are they trading at? What price or what PE ratio are they trading at? So let's assume that the industry PE ratio of the peers is, let's say, 20 times. Okay, so what does this imply? This implies that the price at which this stock of ours is trading is much lower than the industry PE ratio, and in that case we should go ahead and buy this stock. Okay, so this is how you can use basically EPS to find out the valuation of the company and thereby understand whether you can go ahead and invest in the stock or not. I hope you found this video to be useful. Please do like and share. And if you have any feedback or want to suggest a topic for any future videos, then you may do so by writing about it in the comments section. Also, we come up with interesting videos on finance and accounting topics regularly. So if you have not subscribed to our channel yet, then please do so by clicking on the subscribe button so that you can get the notification as soon as we release the new video. Thanks for watching. Have a nice day.